Hi everyone, you're all very welcome to another market update here at the Alpha Capital Group. So obviously a lot of volatility on Friday to end the week. Of course, we had NFP. We did see some fairly decent price action swings. And of course, we'll be talking about that this morning. Overnight, of course, we did also have the RBA, who again raised rates again for further time. So they did 25 basis points, or 0.25% overnight, raising their interest rates to 3.35%. But I suppose if you look at it a broader market observation, we can see very, very clearly that all of the central banks now are starting to slow down. Okay, we saw last year, kind of the back end of second half of last year, H2, we saw very, very aggressive movements very, very quickly by central banks. And that was, of course, the goal, to get those interest rates as high as possible in as short as possible period of time. Then over time, obviously, the interest rates will start to come into effect, and it means then that they won't have to raise rates as aggressively as they've done so last year. So, of course, now, if you look at recent weeks, Bank of England and ECB leading the way at 50 basis points. So currently speaking, they're the most hawkish out of all of them at this moment in time. The Bank of Canada, the US Fed, of course, 25 basis points in recent weeks. And of course, overnight, the Aussie going 25 basis points. So as we saw, 2022, the Canadians and the Aussies, the US, very, very aggressive in their policy stance, getting those rates above 3% very, very quickly. And of course, if you look at the US and Canada in particular, BOC and the Fed are both well over 4.5%. So naturally enough, all of these other central banks have a lot of catching up to do. The Fed, comparison to the ECB, and obviously the Fed in comparison to the Bank of England, you're seeing that now. The Bank of England, the ECB having a much more kind of delayed, hawkish cycle approach. And of course, that's what's actually at this moment in time giving the euro and the dollar some additional strength against those markets, broadly speaking. So of course, you're seeing cable for the last number of weeks trend higher. We're seeing euro dollar trend higher. We're seeing the Aussie trend higher. So these are just some very, very simple examples of that. Now, I suppose firstly, before we go any further, let's obviously look at the calendar for the week ahead. So if you look at the economic calendar, so as we look at the economic calendar for this week, we have a lot of kind of minor data events. So a lot of the kind of the primary data events was really taking hold last week. Of course, we had the Bank of England, we have the ECB, we had the Fed, we had ISM data, we had NFP. So we had a significant amount of I suppose, economic data and economic information coming out last week. So this week, we're not really expecting as much. Now, of course, if you look at the broader calendars, you'll see a lot of low volatile data events. Okay. And that's really kind of first and foremost. Even when you look at a different economic calendar like FX Street, again, you can see fairly decent, a fairly decently reduced amount of economic data. So of course, today we had RBA. This morning, we do have a lot of, what we do actually have this week is a lot of central bank speakers. So whether it's the Bank of England with Pill and Ramsden and Cunliffe, whether it's the Fed with Powell, whether it's the Bank of Canada with Macklem, we do tend to get, in the week after interest rate meetings, you then start to see speakers starting to give their own individual thoughts. So of course, last week, when you looked at the Fed, the Bank of England, the ECB, it gives a generalized viewpoint of the overall committee, right? But this is where we start to see individual people giving their own thoughts, their own viewpoints in respect to themselves, okay? So obviously this week, not really that much when you look at it across the board, really. Obviously Friday tends to probably is going to be setting up for probably the busiest week this week. But of course, Tuesday, Wednesday, Thursday, the top half of the week or the bottom half of the week, we're expecting volatility. Okay, we're starting to see the markets now ramp up again. It'll be interesting to see now, is there any sort of reaction, particularly speaking how volatile the markets were on Friday, following those NFP Friday evening moves in the financial markets as well. So I suppose that's really kind of first and foremost this week, keeping an eye on data. I suppose the central bank speakers like Cunliffe, Schnabel, Powell, etc., tomorrow, Williams, Waller, all of those will be on live Squawk or TweetDeck or any of these kind of channels where you can get this information fairly quickly. Now, I suppose just the one thing I would say is for those who are trading short-term timeframes, who are trading like scalping strategies or 1 minute, 3 minute, 5 minute charts, etc., just be aware, okay? Because it doesn't always mean that the price action within the technicals is going to do exactly what's happening with these speakers. Now, of course, you'd like to think that that would be the case, but sometimes you will get slippage, you will get volatility, particularly if it's an important speaker, right? So if it's a voting member, if it's a governor, so if, like, for example, Macklem, it's important because those types of comments could move the markets 20, 30 points. And of course, if you've got a 5 or 10 point stop, the markets will only quote the next available price after that slippage has been factored in. Okay. So if you're looking to get out at 10 points, you could be hitting a 20, 25 point stop. So that's why it's important just to be aware of what's coming out. So you're preventing yourself from taking on undue, unnecessary additional losses than maybe what you have to. Okay. Now, stop losses are stop losses, but you have to realize in line with slippage, they're not guaranteed, right? So that's really, really, really important. And I don't see many people on YouTube or any other platform actually telling you this. Okay. When you put in a stop loss, yes, your stop loss is there as a protection mechanism. But if you have slippage in the markets, your stop loss won't get triggered, right? 90% of times, particularly if they're tier 2 liquidity, tier 3 liquidity, if they're the traditional retail trading platforms, shall we say, there's not a hope. There's absolutely no chance that you're going to get filled at those stop loss prices. So it's just giving people an idea of what happens from the brokerage side. So at least that way then, when it comes to trading, you're making the best decisions. Now, of course, with us, obviously tier 1 liquidity, we like to think that we minimize slippage in the markets as much as possible because of the fast execution. But during times of high volatility, that can never be fully guaranteed. And I think that's an important element for traders to be considering of and to be recognizing of that fact. Now, as I said, this week we've got a lot of low volatile data events. We've got mortgages, we've got gas, stock changes. We've got pretty much a lot of data that we kind of wouldn't normally look at. But Friday we've a lot of data in the UK. We've obviously got Canadian data as well on Friday. So we're really kind of looking at the back end of the week, right? Thursday, Friday, probably giving us the most volatility, broadly speaking. Of course, Friday as well, we've got Chinese CPI, but we'll be doing videos later in the week, retrospectively, looking at the price action, looking at the markets, broadly speaking as well. Now, when we look at the price action, what have we seen in the markets since last Friday, right? We've seen a very, very clear decline, as we talked about in previous weeks, in the dollar. Very, very clear decline. You can see it there going continuously lower, continuously breaking to new lows. And then, of course, last week, this higher time frame level here around 101, 101.50 was, of course, last June's cycle lows in the dollar. Now, temporarily, we did break through it. But of course, very, very clear inducement because the markets completely ran the other way. Okay. Very, very clear inducement. And markets rallied all the way up here in the DXY to 103.80. Now, if you're looking at this price action structure, the first thing we can see here is last week into NFP, very, very flat consolidationary moves. And in fact, over the last couple of weeks or so, it's been fairly consolidationary. Okay. We've had clear inducement to the downside. We've had clear inducement to the upside. So now it's going to be the big debate is, do we continue with dollar strength all the way back up into this local area up here between 105 and 105.50? Or do we see a correctional movement in the markets short term to allow a cleaning out of the impulse that we saw from last Friday? So last Friday's impulse off the NFP, do we see the markets try and clean up all of this liquidity, all of this order flow that was accumulated over the last weeks? Because of course, we have taken the lows, we have taken the highs. The logical scenario would now that we would probably see some sort of retracement to try and clean up some of this short-term volatility, short-term liquidity in the markets, and then try and see, is there potential then for price action to move higher back up into this level 105.50? Okay. Now that's, I suppose, an interesting scenario. That becomes scenario number one, right? Scenario number two is where this aggressive buying that we've seen from last Friday into yesterday continue to play out. And of course, if that continues to play out, really you're just looking for successive higher highs, higher lows in the order flow, preferably on the shorter timeframes. Now, what we mean by shorter timeframes, probably 1 hour and less. They're the most logical scenarios. As we see it at the moment in time, we have 4 hour tops, but of course, if we're getting 1 hour, 4 hour closures of this short-term top here above 103.75, the likelihood is you're going to get that continued progression. You're going to get that continued sustained movements. So that means GBP USD should likely fundamentally continue moving lower. Euro USD fundamentally should continue moving lower. So the next phase in the dollar pairs is very much going to be drawn out about what happens next with the DXY, right? Do we start to see an influx of weakness coming back in, or do we see sustained strength? And that for me is obviously most important. Now, as I said, when you look at the order blocks, when you look at the liquidity, we had accumulation previously into the middle end of December. We had taking of highs, very, very clear reaction. This time we've taking of lows, very, very clear reaction to the downside. So all of this price action or imbalance or order flow is unfilled. It's unmitigated. Price action is yet to really fill out any of this price action we saw from the beginning of the year sell off, particularly from the 6th of January. So the 6th of January, of course, was the previous NFP. So this was the previous NFP. This was kind of the NFP from Friday. Okay, so it's important to understand the dynamics at play within these markets, how they look at order flow, how you look at liquidity in the markets, and being able to spot that. It's not always just about buying off of support and selling off resistance. There's bigger movements, there's bigger plays happening behind the scenes, and it's important to have as much information as possible, have as much knowledge as possible, so at least that way then you're making clearly conscious decisions and you're able to spot these order flow moves, you're able to spot the liquidity, you're able to spot the traps, for example, up here and down here accordingly as well. And at this moment in time, when we look at the price action, we can see very, very clearly, very, very aggressive move from the NFP, of course. So this was obviously a little bit off after the Fed and the ECB on Wednesday and Thursday. NFP on Friday, running it up, taking the highs, and now we're in the short-term area here. And of course, if you look at the 1 hour price action here, you can see very, very clear consolidation taken out here between 103.40 and 103.80. Very, very clear reaction. Initial highs, price action consolidates into the weekend. We gap down, we come back up. Price action tries to break out to the upside, but this 1 hour wick comes back down into range. And then, of course, we get that 1 hour wick to the downside. So you're getting wicks on both sides. So that shows the markets at this moment in time is still in a decisional aspect, right? What do you mean by decisional aspect? Well, we're not sure yet whether it's going to ultimately take out these highs and continue progressing higher, or ultimately reject this, come back in terms of this order flow move from Friday and try and mitigate this negative structured or kind of flagging structure here with that very, very aggressive move into flagging price action up into this region. So that's why it's just the next move is going to be important to determine, do we sell off from here to try and undo and mitigate some of this order flow, or do we continue trending higher, ultimately in line with the 4 hour chart, and of course try and mitigate the order flow? And that of course means price action most likely coming up into this region up here between kind of 105, 105.50. So that's the current state of play on the DXY, broadly speaking. Now, when we look at the Euro USD, right, firstly and foremost, what are we seeing on the price action? Very, very clear order flow for a second. Now, let me just remove this for a moment. Very, very clear order flow. We had very, very clear bearish selling price action through the back end of last year. Then, of course, October, November, we had that pivot point. We had starting to see a stagnation in policy in the Fed because, of course, they were slowing their rates. The ECB obviously continued to raise rates a little bit more aggressively at this moment in time. So that's why, of course, over the last few months or so, Euro has been a lot stronger because it's all cycle analysis, right? What goes down must come back up eventually, and what goes up will most likely come back down, because that's what the price action is. It's just a constant battle between buyers and sellers in the markets at liquidity levels, at key areas, at points of interest, etc. All of these expressions that you've probably heard of before: supply zones, demand zones, resistance, supports, etc. Right? So our goal is to try and identify what's happening in the price action, which way is the trend moving, firstly, and then obviously start to spot the liquidity at a much deeper level. And then when we can do that, you're then able to make very, very clearly defined decisions off the back of that. Now, if we look at euro dollar over the last few weeks, what's the first thing that we can still see very, very clearly here? It's bullish order flow, right? Why is that? Because, of course, we're still creating higher highs, higher lows, higher highs, higher lows, short-term higher highs, higher lows up to here, correctional pullback, next wave of price action up into this region. And even in the last few weeks, last week or so, even if we kind of just move that in depthly, you can even see here, short-term lows, new highs, short-term lows, new highs, very, very clear sell-off. And this sell-off here from last Friday, last Thursday, and of course yesterday, is breaking structure. It's breaking this short-term bullish order flow here with higher lows, and this one here as well with higher lows as well. And of course, what that means is effectively we're breaking the daily structure that's playing out. Now, no doubt, we could very easily see the dollar come back into this kind of 105, 105.50 level, this kind of daily order block zone here. I'd even say more broadly between kind of 105.25 and 106, because of course the daily order block is really here, 106. But that's kind of what we're looking at. So we need to see now is, well, we've got two scenarios. We could see the price action continue selling off, like we talked about in the DXY, continue selling off back to this daily zone. Or second to that is, well, we've taken out this higher high, higher low structure with a very, very clear sell-off. Do we get one last sort of impulse back up into this region to then allow that correction, right? And that means then we've had very, very clear bullish order flow into a very, very clear bearish cycle retracement in the euro dollar against obviously that much stronger euro v dollar play that we've seen over the last few weeks. Now that's I suppose they're the two scenarios. Now when we look at the price action Let's isolate the price action from the last few weeks, okay? So this is obviously the NFP move in January. Very, very clear order flow to the upside. Very, very clear move. Obviously last Wednesday off the back of the Fed. And then, of course, completely turns in a sixpence. So all of the Fed buying makes the new highs. And then, of course, markets just completely fold on itself. And that's really, really important because, of course, we're looking at the dynamic in play. We're looking at right into the Fed meeting. We were just consolidating. Moving sideways. There was very little happening within the price action. Sorry, guys, just let me filter this through. Very little happening. And of course, we get that very, very clear break to the upside. Okay, very, very clear break to the upside. Bullish order flow is still playing out. We've higher highs, higher lows. Equal highs here, structured lows here. Obviously, new high. And then, of course, the sell-off takes out all of this liquidity, and even takes out this initial break from this break of structure over here as well. So now the next case of price action is just waiting to see, do we get a correction back up into this zone at 109, like so, or does the price action immediately break through these shorter lows here at 107? If we're taking out the price action here at 107, the likelihood is you're probably going to see move backs into 105, 105.50. So it's just about understanding the dynamic at play within the price action. All right. So that is euro dollar. Cable, very, very similar scenario. And structurally speaking, I was kind of looking at shorts myself this morning from yesterday's play. Obviously from here, with consolidation, obviously taking of highs, taking of lows, flagged back into the liquidity area here. This 15-minute order block. Now, I know sometimes it can be a little bit messy when you have big wicks, but came right back into this level and, of course, rejected it this morning at 6:45 a.m. here in UK time, all the way down. So, of course, if you were looking at that structured-wise, short-term movements, you can, of course, see fib rejections very, very clean, firstly. Very, very clear in the key area. 276 extension also met. So obviously order flow still playing out there very, very nicely. Now, of course, what's happening from there as well, even this morning, short-term highs, short-term lows, correction. So even after the bell, after that initial impulse this morning, you have a secondary pullback. You actually have a secondary pullback on the shorter time frames, and of course gets back into the key level again. Markets are selling off. So at this point in time, there's a clue here that the cable looks like it's trying to hedge to the downside, right? If you look at the broader perspective, well, what's happening on the cable in the broader perspective, of course, daily time frame for a second, we can see obviously very, very clear bullish order flow. Now let me just tidy this up ever so for a moment. Very, very clear bullish order flow into this point of interest, into this top formation between 123.50 and 124. And we talked about it last week. A very, very clear top formation. Again, this is kind of what happened with Euro USD. Bullish order flow, very, very clear break of structure, taking out the higher lows, comes back up to mitigate the order blocks, the order fills, the liquidity area, accumulates, and then sells off again. And even now, we've had very, very aggressive selling Thursday and Friday. Price action cable, Monday, and obviously today, becoming less entrenched, less ingrained to very, very clear bearish price action. So that's, of course, looking to see, well, does the price action break through, let's say, 119.80, 120? Because if it does, we're really looking at the price action coming back into this recent low here at 119, and more broadly, at this liquidity area here, which, as I said, stands between kind of 118 and 119. I suppose that's really the important point here at this moment in time, because, of course, we're looking for a clearer directional bias because we are mid-range. We are obviously a decent way up from that initial selling zone from Thursday. And, of course, we are a decent way still above this kind of area of here, this liquidity area down here. And, of course, when you look left, really the order blocks set out very, very cleanly here, as I said, around about 119. So that's kind of really worth paying close attention to see how does the markets react. Do we see that continued sell-off on cable back into this 119 level, or do we start to see a migration of, let's say, dollar weakness back into this order block zone down here, back into this liquidity area down here, and of course, therefore allowing cable to have higher highs, higher lows, lower highs, higher highs. So that means then we become more into a stagnated consolidation really between 119, 120, and obviously this area up here between 123.50 and 124. So that's really kind of what's really worth paying attention to towards now, because of course we're getting very, very sharp, aggressive moves. This was the January NFP move, and of course this is the February NFP move off the back of ECB, Fed, and of course Bank of England as well. So order flow at this moment in time, even if you look at the 4-hour candles, it's still very much tilted to the downside. You can even see there from the volume areas, the volume profiles and stuff like that. If you bring that in as well, very, very clear bearish order flow. Even here as well, you look at the order flow, lows, highs, This looks very much like it's going to try and take this lower. So it's all about having that very, very clear process, very, very clear structure in place, and then being able to follow that. Now, moving across to the Aussie. First things first, in the Aussie, what are we seeing? As I said, across the board, very, very clear bullish price action against the dollar in recent weeks. Yes, first thing on our list. We talked about 71 last week. We even mentioned this area up here. Rejected beautifully. We actually did temporarily get a fake break or false break above that level before the price action came completely back down. Now, this is very similar to Euro. Why? Because, of course, we've higher highs, higher lows the whole way up into this key area. Now, if I just remove this for a moment and we look immediately to the left, you can, of course, see this kind of point of interest, or you've got point of interest slash value area. All right, big important area here. Now, of course, we did obviously try and break through it. Okay, then that's probably the most important thing there is the fact that price action broke through it or tried to break through it and then turned on a sixpence. And when we turned on a sixpence, this kind of 2-day snap of selling, very, very clear order flow. So we've taken out this kind of short-term low. We've even actually broken out this short-term low as well, because of course, highs into lows, price actions trying to break through and ultimately failing. We're coming down. We're now propelling ourselves back up. So that's given the idea of, right, are we getting that pullback? Right. For me, if you're looking at Aussie dollar, you're really looking for, wait for this 4-hour chart to load. You're really looking for moves back up into this, as I said, 70-50 level. Now, why is that? Well, of course, we've got highs, lows, break of structure. So this is obviously a very, very clear break of structure here. Okay. So we can see that in fairly clearly, very clear break of structure, right? So that's obviously first thing, right? Secondly, then we're identifying where is those initial sell-offs come from last week. Where really and truly you've got a couple of ones up here. You've got a very, very clear snap and a very, very clear apex. So the apex is very, very quick up and down back into this level. So really and truly, yeah, you might try and see a move back up into 71, but the likelihood is you're probably going to see a reaction from here, okay? Because, of course, this is where the apex really began from. Now, of course, if we were to do that and say, well, if we were to break above 69.50, 69.50 here is probably the clue that we continue moving higher temporarily back into retest this structure level, back up into this order block zone, okay? And then it's just identifying that retrace just temporarily. And of course, this area here fits in very, very nicely, right? Pretty much it's at the square. So for those of you who are wondering where the 0707 comes from, if you square the 618 and the 786 collectively together, you get 707. So that's what the 707 level is. And it's an automatic, it's not a defaulted one. It's one that I've inserted myself. It just gives a little bit more definition in this kind of refined area of premium discounting the premium value and opportunity. Okay, so that's kind of really where the areas you kind of should be looking at. Now, as I said, 61.8 is below 70.50. I think this area here is very, very prominent. So we're keeping an eye on that, particularly if we break above 69.50. I think 69.50 short-term breaks, because of course, even if you look at it now, we're not breaking above 69.50 because of course, very, very clear sell-off, dead cat bounce recovery, new lows, all the way back up. And of course, you can see very, very clearly, price action this morning isn't breaking above 69.50 because of course, this point of interest, this order block up here is still holding firm. Okay, unless you get a break above this area here, then there's no real buying in the markets at the minute. Okay, very much tilted to the downside still. And of course, when you bring in the price action concepts to identify that, just to kind of reinforce the viewpoint, you can see it. Now, the only thing is here, you've got temporary higher highs in the wicks, but if you look at pure candles, or even if you were to bring in a line chart, you would see that this wouldn't necessarily be factually correct because, of course, lower highs were still accumulating underneath. And of course, if you focus on the candle closures rather than the wicks, you'll see that all of these are still closing underneath this one. So just be wary of that as well. Okay. So that's important. So this area here between 69.40, 69.30 and 69.50 is really, really important because, of course, that's going to give the next phase whether we continue moving lower to the downside or whether we get that correction back up into this level we talked about up here. And of course, that becomes the focal point way up here around 70.60. All right, so that's the Aussie. So next on the list then is the dollar yen. Dollar yen has been incredibly choppy. Very, very clear order flow to the downside in recent weeks. Very, very clear lower lows, lower highs. Okay, you look at it broadly. Lows, highs, break a structure. Lows, highs, break a structure. Takes out this structured level here. Comes back up to this supply and demand area. Rejects. Break structure, new lows. Comes all the way back up into equal highs. Up here at 134. Tries to break above it. ultimately rejects, very, very clear snap back to the downside, a little bit of a pause, break of structure, new lows into accumulation. So that's effectively what we're seeing. And it's very, very obvious what's going on because it's just clear order flow, clear trending price action. Then, of course, over the last week or so, we're starting to see that bottom coming out. We're starting to see price action pivot. We had the initial impulse. We came back in, mitigated this bottom or this low down here at 127.69. Nice opportunity there. Came back up here into this consolidation, of course, into last week's data. One last little move lower, takes out or rejects this area of interest down here. So you've got 4 hour, 1 hour structure down here and a very, very clear pivot to the upside, right? Very, very clear pivot back into this volume area, breaks out above it, takes out all of this order flow, continues progressing higher. Where to? All the way up to this 4 hour daily zone. And of course, that was between 132.30 and 132.70. Now, of course, we did try and break out above it, but of course, that's recognizing of the fact that we're still creating higher highs, higher lows. Because of course, lower highs, lower highs, lower lows, lower highs, lower lows, short-term lower highs into bottoming structure, lower highs again. So we're seeing mitigation of order blocks. We're seeing mitigation of areas on both sides. So that's really, really, really important. So that means that the price action is trying to be as clean as possible, which is, again, what we want to see. We want to see the price action being as clean as possible. Now, of course, this week, this was the NFP move where we closed on Friday, gapped higher into value area, into point of interest, into order block. Very, very clear pullbacks. We are still creating shorter terms, higher highs, higher lows here. So you've high, higher low, higher high, higher low. So now we're looking to see, does the price action break structure here? Otherwise, what you might see then is price action trying to go higher and ultimately trying to break out to the upside. And then, of course, that means then the bullish order flow is still pretty much intact. And then the likelihood is then, well, where do we go from there? Well, you have area up here at 134, 134.20. And then you have another area up here, way up here, kind of between kind of 137 and 138. You've got one there and you've got one slightly above it. So that's just really kind of what we're looking at now. But again, short-term structure is relatively important here because we're identifying how is the price action working out. And that from a market dynamic is really, really, really important. Okay. Now, quickly, we're scanning through the indices now. Okay. But before we look at the indices, we're going to look at gold. So as we talked about last week, gold came all the way up to this beautiful weekly level of 47s, mitigated it perfectly, right? You look at the weekly charts. Where did the last bit of buying come off in 2020? Of course, it was from here. Very, very clear selling. Of course, very, very clear selling. Bearish trend all the way back up. And we wick reject this area up here in the weekly. Very, very clean. And of course, on the daily time frame, you will also see bullish order flow. Higher highs, higher lows, higher highs, higher lows, higher highs. Very, very clear break of structure. Takes out break internal structure here with that 2-day snap. That 2 days of bearish price action has taken out the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, almost 18 days of price action. And that is how we get those snapbacks. Okay. That's what you tend to look for. Now, of course, when you look at the order flow, as we said, higher highs, higher lows the whole way up. Very, very clear high. Very, very clear bottom, now forming price action starting to consolidate. So it's not retracing yet. We're now in a consolidationary state. We're holding above 1860 approximately, and we're holding below 1880. So we're very much in a $20 consolidation, which is very natural after a 55, almost a $60 sell-off plus another 25 on top, another 40 on top. That's pretty much a $100 sell-off in 2 days. Massive, massive, massive volatility. So now it just becomes a case of how does the price action react in this region? Because of course now we're starting to go laterally. We're not kind of creating that correction back up into this initial level at 1920, which you look left, you can see very, very clear price action structure in this region, 1915, 1920, or way back up for a secondary mitigation of some of this area up here. Of course, very, very clear action up, very, very clear action down. So really now we're looking to see how does the market dynamic react in this region. Of course, why is that important? Because, well, if you look at the price action, we could absolutely create a pullback or a retracement into this zone, or we could very easily continue selling because, of course, we've had very, very clear bullish order flow for probably 2.5 months or so into a correctional phase, which comes back into some of these important levels. And of course, when you look at the weekly charts, again, tidy all that back, you can see, well, if this is potential high in gold, and we're looking at that broadly, and we look at the break of structure to the downside, well, is this a potential for a correction? Not maybe to new lows down here at 1490, but maybe into some of these lower levels. maybe back into some of these lower levels. And that really becomes the interesting narrative now. See, how does the price action react over the next few days to see, like, there's a lot more bearish price action that could happen, right? We had a very, very quick move up into 1950 and a very, very quick initial move back into it. Now, I think that's important to see how does the price action reflect in the next couple of days to see if we can get an order block rejection, see if we can get one up here between 1920 and 1940, because if we can, that would then allow for a potential lower high and really then a decoupling potentially for that correction back into maybe 1850s again, 1790s, looks a nice logical level down here as well, or maybe even 1750s way down in this region down here. So that becomes interesting viewpoints for the next couple of days, broadly speaking. But short term, again, very much watching the price action here to see how does the price action reflect accordingly. Okay. So that then brings us to the indices. Okay. So indices is very interesting because, of course, bullish order flow is still moving on the S&Ps. So longer term bearish trend is obviously still very much intact because, of course, lower highs, lower lows, lower highs. So if you were to look at peak to trough, so let me just remove all of this for a moment just to kind of clear the field a little bit. Let me just remove this down here, this area here. We can kind of see it a little bit more clearly. Okay, so we've got obviously peaks into troughs, corrections, bearish trend. That's kind of what we're looking at here. Okay, so now if you look at the broader peak to trough, we are very close from the most recent leg of selling, which again started way back in August, to the most recent lows in October. And this bullish correction, this is a retrace. We are getting very close to these kind of areas. Okay, we have broken to new highs initially, above 4140, 4150 on Friday. We're now creating kind of more stagnant, sharp highs in those. So now again, like Eurodollar, like gold, in order for us to really be looking at short indices, mainly the S&Ps, we need to see that break of structure. That break of structure taking out this bullish order flow. But at this moment in time, trend is still very much bullish. Now, when you look at 4-hour structure, that's the higher time frame viewpoint. If you look at 4-hour structure, let me just remove these fibs for a moment. You can see very, very clear, obviously break of structure. That's important. That's the first thing. Okay. Let me just bring this back in for a moment. Change of character as well. Very, very nice. Obviously highs, lows, bullish order flow. So there's very, very clear order flow there on the upside, which is important. That's the first thing. Second thing is if you look at Thursday and Friday, right, initial peak to the upside, almost immediate move back underneath. We then actually close back underneath this green line. Of course, you can kind of see it there with that close. One last move higher, rejects this little area here, 4150, 4156, and is folding back on itself. So at this moment in time, although the indices are daily trend bullish with highs and lows, we are in a correctional phase. Because, of course, we've seen from Wednesday, the Fed meeting, we went from 4060 all the way up into 4180, back down. So we're looking now to see, is there any sort of reaction in terms of down here? Now, the only reason we're really looking for shorts is if we get successive breaks, we're looking for that gold movement in gold. Very, very clear selling, taking out multiple higher lows or swing highs, swing lows, depending on what structure you're looking at. At this moment in time, we're not doing that. We're still creating bullish order flow. So just be wary of that, okay? And of course, right in the middle of the equilibrium zone, very, very clear 4062 order block as well. So there's very, very clear price action there as well. So structurally speaking, it becomes a case of, well, how does the markets react in this correctional retracement, okay? Because of course, we've gone from lows into new highs. We're now pulling back. You'll even see a 61.8 rejection on Monday initially, obviously short-term rally, but it looks like there's more to come. It looks like this is going to try and make its way even lower. So that's why this region down here becomes ever so important, this kind of 4050 to 4080 level in the next day or so, to see how does the markets react. Do we see that kind of little bit of a pullback? And if so, and if we start to hold this level, then you're really looking at just the continuation in order flow. And of course, that means movement to the upside again. So worth keeping an eye on that, ladies and gents, for those who are watching along in this video. So now let's move across to some of these other indices. Again, Nasdaq was as clean as we like. So we talked about it from last week. This area here, 12.8, absolutely beautiful, right? Absolutely beautiful. Very, very clear reaction from 12.8. So we talked about it last week. We talked about it the week before. Could we get a move above? Well, initially it was above 11.4s, and we said once it breaks through 11.4s, then you're really looking at kind of 12,000 and then obviously 12.8. We broke through 12,000. Very, very clear move last week. Came all the way back up. And again, it's just cycle analysis, right? What goes up must come down eventually. Clear bottom formation. Very nice little retrace. Nice little correction back up into the zone. Because, of course, when we look left, you will see the 4-hour order block here is marginally under 12.8. Let me just move the camera out of the way for a second. you would see it there at 12,750. And we've come all the way up into that 12,750, 12,800 level. Very, very aggressive move. Clear pullback. Secondary move. Lower highs forming. Obviously, very, very clear lower highs. And now we're correcting again. So the price action is creating like a bear flag. Very, very clear move to the upside. Very, very clear downside flag forming. So obviously worth keeping an eye on that as well. All right. Dow Jones has not really done that much in comparison to the other two. Really, it made the initial moves at the beginning of January. Then obviously the pullbacks to the NFP order block area here at 33,000 came back up again all the way into this 34,300. And we even mentioned this area here last week. This level was in last week's video. If you want to take it, complete rejection from the zone, rejection, consolidates then, and we're starting to move. Now, the only thing I would say in relevance to the S&Ps, Jones in comparison to the S&Ps and Nasdaq, is we have trend line liquidity. Okay, so we've a lot of liquidity off of this trend line here, because of course, if we were to look at this, now I don't use trend lines too often, but you can kind of see it there visibly. Price action is kind of holding this here, right? So short-term highs, lows, highs, lows, highs, lows, continuously up into this consolidation region. And if we look immediately into the zone, if we exclude the wicks for a second, very, very clear consolidation at the top of this trend line here. So 34,000, between 33.5, 33.6 and 34,000 is going to be very, very important this week to see, does this actually hold up, or do we continue trending higher? If we continue trending higher, you're really looking for another move back into 300s again, and maybe even potentially on up to 875s up here on the upside. But we're really watching to see, how does this trend line liquidity happen? It doesn't happen that often, but when it is happens, it's obviously very, very relevant. You can kind of see it there. And if we move it as well, you can kind of see it on the 1 hour, very back and forth on the Dow Jones. And overall, pretty much a chop fest. So just be wary of that. DAX, now European indices, DAX, Euro Stoxx, almost similar, identical pattern. So into NFP, into ECB, into obviously the central bank meetings, the DAX and the Euro Stoxx, the FTSE were broadly consolidating. You look at it, Euro Stoxx is moving sideways from really the middle of January into the beginning of February. We had that clear breakout last week. DAX, similar scenario. Clear consolidation above 15,000 and between 15,000 and 250. Broadly 275. Very, very clear consolidation. Very, very clear upswing. So now both of them has identified accumulation zones. Both of them have initiated upside spikes to break that liquidity. You've seen it there very, very clearly on both sides, right? We've got very, very clear levels here, roughly about 41.20, 41.50 on Euro Stoxx as a potential mitigation area, right? If we do get that pullback. Secondly, then on the DAX, we have that area, as I said, between 15,000 and probably 15,075. So 15,075. So they become levels. Now, if you look at the price action this morning, yesterday, we're actually holding fairly decently above the top of this break of structure line, right? So this area here, we're holding above it. Price action's holding that as a supply and demand zone. So you've got support and resistance coming in here, okay? You're seeing it as well in the Euro Stoxx, break of structure, the supply and demand area here, holding very, very nicely. So ultimately, if we're going to get that pullback back into these zones down here in grey on the DAX and Euro Stoxx, we're looking for this short-term support area really to give way, to clean out this impulse. So this impulse and price action in both the Euro Stoxx and the DAX. So just becomes a waiting game really on those two. Lastly, then on the FTSE, very, very clear moves. And of course, FTSE got to 7,900, right? So it effectively filled this weekly wick way, way, way back from 2018. We've now filled it. Okay, so this was 2018 wick, back and forth between 2018 and 2022, accumulation all through 2022, very, very clear swing, bullish order flow still playing out. So I suspect a lot of guys who are hedging shorts are not in trouble, but they're starting to see increase in margin and so on. Okay, now when we look at the order flow, what are we seeing? Highs back under this weekly level. So this was the 78.15 was where the weekly closures were. And of course, if you looked at it into last week, accumulating continuously sideways and then breaks out. And then what happened Friday and obviously Monday, very, very clear pullback to 78.15, and the markets is now pushing back up into 7,900 again. So structurally speaking now, it's really a case of how does the price action reflect in this area here between 78.90 and more around 79.20. If we're taking out this highs here at 79.20, the likelihood is 8,000. The nice psychological 000 number, 8,000, looks likely. Okay. Now, the only problem here is that even on the downside, right, you're getting highs, you're getting lows, you're getting highs. We're not getting back into this zone down here. So there's a very, very clear, stronger emphasis here on buy-in unfortunately, the sellers aren't getting out of the markets, right? You look at the moves from last month, where you look at where the January move started from, right? Very, very clear selling from 7,300, 7,350 initially, right? Then we've the second phase from 7,500. We're not even getting back into these levels. And that's really what's important here, because the markets are still trending higher. So therefore, I think it's just being pragmatic to say, well, if you are hedging shorts, you probably want to be kind of hedging with some longs, maybe to try and mitigate the drawdown, because of course, if you're running at 500-600 point drawdowns potentially from these types of moves, that's obviously quite difficult, right? That's very, very difficult. So it's just about kind of mitigating or minimizing the exposure on the account as well. All right. So that's pretty much it, everyone, for the kind of market run through so far this week. So not terribly much in terms of data. I think price action is going to be key. Obviously, watching the dollar closely, particularly for indices, particularly for euro, particularly for cable, and of course watching the broader narratives as well in the markets, because I think that's going to probably clean up a bit of the price action, clean up a bit of the liquidity in the order flow from last week's initial moves as well. All right, have a great week, everyone. Take care.